Okay, welcome back to another trade recap. Right here, we have the AMD model playing out with a beautiful, beautiful setup. So we can get straight into it. The daily bias for today was bullish because we had this failure swing to all-time high, and based off the 4-hour closure towards the end of the day, it looks like we're respecting bearish or bullish PD arrays. So pretty much, we can go down to the lower time frames and look for structure to be aligned with ourselves. So you can clearly see we have this SMT with this 2 p.m. On Tuesday. So we had this SMT towards the low of day, and we respect this 4-hour fair value gap, not inversing it fully, and coming back into this 4-hour fair value gap after the 6 p.m. significant candle body closure. Price looked like it wanted to come towards previous day high and ultimately all-time highs as well. So after that, we had an SMT. I can go down to the lower time frame and I can show you why price is actually bullish here and my thesis for longs here. So you can clearly see, right, over here, that we get a beautiful accumulation during Asian session, and London session does not manipulate any highs or lows significantly in getting that change in the steady delivery. Let's say we had this accumulation, manipulation, distribution, and then we get a change in the steady delivery, then it would be a different thesis, but we just accumulate, creating this LRLR. And what does CPI do? It creates the low of day. And how do I know this? Is because, look, in our daily profiles, right, New York manipulation happens either at 8:30, driven by a high news impact event, right? So once I saw this structure formed and this SMT at the lows, ES made it, or Nasdaq made a new low of day, while ES did not make a new low of day with this SMT paired. So for me, this became the low of day. Now this is a confirmed low of day. I wouldn't trade towards a confirmed low of day. I'm going to trade against it, right? So automatically my bias became bullish, and some more confirmation for that was when we opened up at 9:30, we got the significant push down at 9:35. And we created SMT with ES, as Nasdaq is much weaker here, taking out this 8:45 a.m. low, while ES is much stronger. So with this SMT at these 15-minute lows, I began to prepare a thesis for longs. And so after that, pretty much you can clearly see on the 5-minute chart, ES is much more bullish. You could have taken a change in the steady delivery right here off ES and then, probably caught way more. But for me, I was looking to trade Nasdaq towards previous day high and to ultimately to all-time highs. I thought Nasdaq would, get stronger, but ultimately just got weaker. But anyway, so we had this 5-minute inversion for value gap after this SMT, which is a strong confirmation. Now I waited for the 3-minute change in the steady delivery, this 3-minute propulsion block. So I waited for this 3-minute change in the steady delivery, and then a retest of this area, and unfortunately it led us to drawdown. But of course my stop loss placement was perfect because it was placed at this breakaway gap. Now let's just look at the entry first. So we got this change in the steady delivery, we have a retest of this 3-minute change in the steady delivery. I just limit ordered this, kept my stop loss here. Now why did I keep my stop loss right here rather than at this SMT protected low for a pretty bad risk to reward? I kept it here because I anticipated this to be a breakaway gap. Now what is a breakaway gap for people that don't know? All a breakaway gap is when you take your dealing range from swing high to swing low, in between the 25 to 30% of the range, below the 50% of course, we should form a fair value gap. If we're actually bullish or bearish, if we want to see expansion, we should form a fair value gap that should not be retested. So you clearly see, I think this is around the 30% of the range. Over here we formed this breakaway gap, and I anticipated price to not come back into it, right? And this theory is based off of MXM swing grades, right? There's always a certain function between the 25%, the 50%, the 75%, and the 100% of a range. And so in the 25% of this range, this was this breakaway gap that formed, so I kept my stop loss here, anticipating price action not coming down here. And of course this is also the low of this 5-minute candle that inverts the inversion for value gap, so that's that inversion for value gap entry as well. So pretty much we took our position. This was an A+ setup, SMT at the lows, reacting off these higher time frame for value gaps. A lot of reversal confirmations, PO3 as well, where we accumulated, manipulated, and then distributed. You can clearly see, right, creating this low of this candle. And so we came up here, and you can clearly see we're respecting bullish PD arrays. where we have this nice 3-minute change in the steady delivery. We had that 5-minute change in the steady delivery that held price, and price was just bullish towards this failure swing. And why was this such a strong draw on liquidity for me is because when we engineer liquidity close to a higher time frame draw on liquidity, that is a strong draw on liquidity. I said liquidity a lot of times, but pretty much when we leave failure swings to liquidities like this, we can anticipate price to actually run up towards them because they're just engineering more liquidity for the next day. So that's the exact idea I had, right? We were 20 points away from all-time high right yesterday, and we just left it. So that wouldn't make sense, right? You can clearly see this market maker model playing out, right, where we had this original consolidation. You know, we had this SMT at the lows for that reversal, and then we had the second stage of accumulation distribution and that playing out. Now, all-time highs is 20 points away. It makes no sense for us to reverse here because a higher time frame objective is right there. So that's my thesis behind that, and my thesis, you know, behind the actual trades. But honestly, this was a very good setup. We had this 15-minute change in the steady delivery here as well to continue price higher. And honestly, yeah, this was a very, very beautiful setup. Everything aligned. It was a little choppy when we entered, but at the end of the day, it played out very, very nicely for a nice 1.77R. So yeah, this was the AMD recap for today.